Great. Well, tell us a little bit about your background before we get into this so these guys know who we're talking to and what your experience is in this area.
All right, well, let's see. 1992, I started as a loan officer in this business. And that was my, back then there's no college degrees in it. You just get in it and you learn by the trial of fire. So real estate agents just had me for lunch all the time, but listening to you guys tell the stories of FaceTime and getting out there, you just get out there and talk to people and have them ask their questions and problems and look to solve the problems and kind of just learn the business by getting out there and talking to people and understanding what they needed and figured out how to do loans for them and started out as a broker. I met Mike 6 months into my mortgage career. I met Mike and he says, "Hey, show me everything you know." I said, "Dude, it's not a lot. But yeah, I'll tell you everything I know." And so he sat across the desk from me, and then I had a Mazda B2000 pickup truck way back then. And he and I would take flyers and I'd drive to my real estate agents and then we would drive to his and I'd stay in the car. I'd drive to mine, he'd stay in the car, and we just developed that friendship and we would just, do our thing. And the story goes, we couldn't find really anybody honest to work for. Kind of like this group, just, there's honesty here and integrity, and couldn't find anybody in the business that, back in Vegas. And so he and I started a mortgage broker shop back then together. And we kind of grew it into a mortgage bank and that failed in 2007. And then we just stuck together and pushed through it. And
was that Silver State?
That was Silver State. Yep.
I remember the name.
And if you don't try something, you don't succeed. But sometimes when you try, you fail. But that's just capitalism and entrepreneurial spirit. But we stayed in the business. And so I'm year 30. So what is this now? 32 years in the business. And, I have a passion for products. I have a passion for retail, but, wholesale is an important piece of the mortgage business. So I have a passion for, getting some product to the brokers or, small IMBs. I guess to just keep things short, that's pretty much my mortgage background. My wife and I have been married for 34 years. We've been married for 34 years and we have 6 children.
Nice. 6?
The youngest is 19 and we have 8 grandchildren.
Wow, 6 kids.
Yeah.
That's 6. A commitment. That's a commitment.
My parents had 6 kids.
I stopped at 3.
My wife wasn't an only child, but her older sister was much older than her. And so we got married and she said, "I want any kids." So, okay. I said, we'll just, whenever you want to have a kid, tell me you want to have a kid, whatever, young kids. And she said, "I want a kid." Well, then that number 6, she says, "I don't want any more." So yeah, there you go. So that's how we ended up with 6 kids.
That's funny. Well, so non-QM is an area that we're not very well schooled in, and we keep hearing more and more that we should be doing more non-QM stuff. And I know that when I talked to you, you were pretty excited about the opportunity that non-QM represents. I'm not sure what question to ask you about this. So why don't you maybe give us a flavor for how much business you're seeing and what's evolving and what everybody should be pursuing right now as an opportunity that maybe we're missing, because it feels like we're missing out on something.
I would say yes, but I would say it's okay. Just kind of slowly grow into it. And what I'll do is I'll give you an overview of non-QM, where we're seeing some wins. And really, I'll do a little bit of talking and then maybe that'll spark some questions. Maybe I'll ask an open-ended question or two to see what we get. And then we'll get a dialogue going. about it. But I'll start by saying the best way to look at non-QM right now is it's another tool in your belt. So when you're sitting down and having face-to-face, or you're having a conversation with the financial planner you mentioned earlier, or the CPA, it's when these individuals are dealing with a bunch of self-employed, maybe successful self-employed individuals, and they need help, with their borrowing. They want to keep their money in the market, but they want to buy some investment properties, so they want to buy a new owner occupied, but they want to keep as much money in the market or wherever in their portfolio as they can. You want to be able to have talking points such as these to, partner with the realtor. So you're partnering with them, and you're not, as Mike talks about, that mama baby bird there, but you're partnering with them. So again, tool in your belt, conversational topics. So just some industry wide, the Radians out there, the talking heads of the business, they're saying that non-QM will increase in 2025 400% over 2024. That's what they're anticipating.
What was that again? How much?
400% in 2025 over 2024. So the market is beginning to expand. So you're on the front end of it. More and more people are going to be talking about it. So you want to be educated. And I'm sure that you guys have talked about reticular activators. We have that in our mind. You talk about a red Ferrari, then all of a sudden you're driving down the street and you see red Ferraris. Well, if we understand this product and even just begin to talk about it, our reticular activators will open up and we'll begin to see more opportunities to talk about it. And when you have those opportunities to talk about it, that's an opportunity for another lead, another contract, or whatever. You're talking to real estate agents and saying, hey, how often do you get self-employed borrowers that struggle with tax returns? Oh, all the time. Did you know that we can do, a 12-month bank statement program or P&L, and the list goes on. And then all of a sudden you're talking, and then maybe while you're talking to that realtor, another realtor is listening, and then you're talking to your left and you're talking to your right. So begin to open up our minds and have the reticular activator open up and look for opportunities is really what we want to talk about today. So I'll give you a brief idea, flavor of the non-QM, and I want to be almost like I will be for you like I believe Mike is, and just I'll be happy to consult. I'll be happy to answer questions. Say, hey, yeah, Change Wholesale does this, or ACRA does that, or we do this, or whatever you want. Just be somebody to rely on to kind of just get you into this area. So just some talking points. So self-employed borrowers, you can do 12-month bank statements, 24-month bank statements. You don't have to do tax returns. You take all of their average deposits for the month, you divide it by 12, keeping it simple, and that's your income. So you put that income into the 1003. Okay, Ryan, go ahead.
A question for you. What would be the advantages of going 12 or 24 month?
There is no advantage, honestly. It's really odd that people have that 24-month, but I did use it just recently, where we had an investor who was buying and selling properties. He was flipping. That was his business, had an LLC. And I said, you know what? I don't know if we can really establish consistency here. How am I going to prove that you're going to be able to do that in 2025? I said, you know what? What did you do in 23? He goes, well, I sold 6 properties in 23. All right. Do you have any contract? So in that particular instance, I got 24 months bank statements to establish some history for the guy. But otherwise, Ryan, great question. Normally, you just get 12 months. You don't
Okay, great. Yeah, thank you.
Yeah. You have your asset depletion. Sometimes think of you walking into a financial planner Well, he doesn't want to see somebody spend $1 million on a brand new house and have $1 million leave the portfolio to do so. So maybe you go to the financial planner and you say, hey, leave the money in there. We have an asset utilization or asset depletion. All they need to do is come up with down payment, 20% down payment, and then we'll use their assets as a backing on it. But you can leave the 800,000 in there. Again, talking points, right? Don't get lost on the details of the programs. I can come back later and we can go through the details and I can show you matrices and everything. I'll hold your hand. You can even text me and say, hey, I got this deal. How would you structure it? I'll help you. Okay. So don't worry about taking notes. Just kind of listen and stay loose and open up your minds. Okay. So the CPA. I heard you say you met with a financial planner. Well, that's a talking point with that guy, right? CPA, same thing. Like, all right, so here's a real life story. I manage a bunch of clients that have just a bunch of businesses, like New Hampshire. There's like this CPA had a client that had like 15 convenience stores, vape stores, just convenience stores up and down the Eastern Seaboard. And he does all of their books. They have, it's crazy stories. They don't worry about NSFs. They have so much cash flow. It's just crazy story, but no way these guys are going to qualify on an agency loan. But get them into a bank statement pro. We got one of them into a bank statement program. We got another, they wanted to buy some properties. Okay, just listen, don't take notes. DSCR, debt service loans. These are incredible for investors, right? So the CPA says, hey, I got these guys who want to buy some investment properties. Okay, well, let's let the property qualify then. All they have to do on a DSCR, all a borrower has to do is have the FICO score and some down payment funds in reserves. Because you put zero income on the 1003 or the IRLA, I just dated myself there. Zero income on the application, no job history on the application. You just put the assets, and then you get a lease on the property that they're buying, or you get a 1007 on the appraisal. You take the lower of the two. In some cases, you can take the higher of the two. But all you have to do is have to have a 1-to-1 ratio. If it's $1,000 mortgage payment, rent it out for $1,000, you qualify. You're done. And so think about those opportunities with CPAs and their clients. Their clients always come to them and say, hey, I need a loan. So now you can go into a CPA and say, well, instead of just agency and FHA, which those guys don't want those loans, you've got this tool in your belt for other things that you can just talk to and talk about. So anyway, I'm going to stop there. Got your brains going a little bit there, and let's just have some dialogue on that. Ryan, I think you had a question.
Yeah, correct me if I'm wrong, Lynn. DSCR, because it's a business use, we can do it in all 50 states, right?
I don't know. I don't know your licensing laws. I'm sorry. You got me.
No, it's okay. I didn't know. I've had people say like you can probably do that on your own if it's like in Missouri or something. I was like, that was news to me. So
I would caution you there with the states. Even they even have laws regarding business loans or commercial loans but yes, you're right. It is a non-QM loan. It is a business loan. But even in our world, we still do TRID, even though we technically don't have to do TRID, and most people do TRID, just to stay safe. But I would not know how to guide you on that question there, Ryan. Sorry.
yeah.
That's
Thanks.
a good question that we should find out the answer to, though. I'm curious as well, Ryan.
I think you're right,
Yeah.
Ryan. You could just call like the change wholesale guy or call one of the reps and ask him. They'll know. But I think you're right.
I think it's good to go through deep, right? Deep Haven, because we're delegated.
All right, so you've got change, you've got Deep Haven. Now, what where would you want now that I've started where I started, not knowing where you guys are, what questions would you have for me on the non-QM product? Or do you want me to start prying with some open-ended questions and see what you know or you don't know? Or, I mean, yeah, if you got Change or you've got Deep Haven, those reps are great. But where can I help you today with the non-QM product?
Well, I have a question on the DSCR really quickly. How are they calculating the ratio, and what are they using? Just straight like lease rental income or a rental appraisal? Or are they using, because I've seen the ability to use short-term rental potential, or is that varied by investor?
Yeah, it's varied by investor. You're going to get some investors that will use at short-term rentals. You'll get others that won't. You'll get some that will use it on a purchase, but not on a refi, or vice versa. So the general rule of thumb is, and it's becoming more mainstream, you need to run an AirDNA on it for the STR. So you need to have an AirDNA account. And if you get an AirDNA report, you can usually use the lower of the two, your 10. Now, most of them will use the AirDNA now over the 1007. But the good rule of thumb, if you're not dealing with short-term rental, is you can use both 1007 or an existing lease. And some investors will take the higher of the two, ironically enough, as long as it's not more than 20% of the lower. But your safe rule of thumb is to use the lower of the two, and then you're safe, and then use as the exception the higher of the two, because you might have to go find a different investor, Deep Haven might not do the higher of the two, and they don't actually. So, but you calculate it by just simply taking your rent divided by the mortgage payment. You just want to get a 1. You can go down to a 0.75, but the rate spikes on you. And the reason that investors will go down to 0.75 is because we're in a market that's appreciating. So they know that the house is going to catch up. So they'll go down to 0.75. They'll want a little more reserves, maybe a better FICO. But you also, conversely, you pick up pricing if you're at a 125 ratio or above. So since you have access to the product, I would say that you would practice more on how to deploy it. Like, we have loan officers that are getting into investor groups. So they find groups that are meeting, investor groups that are meeting, and they just start showing up, and they start offering this product to investors. So as an example, a hard money lender is lending to fix and flips or whatever. They need help getting their borrowers out of their short-term loan. So DSCRs can help get them out of the short-term loan. So you walk into these investor groups and all these hard money lenders, you've got hard money lenders there, and you've got investors that are looking to borrow, or you've got investors who are looking to figure out how to become investors. They're all kind of commingling, and they're helping each other in this investor world. If you get in there and just start showing up and start listening to the dialogue and start asking questions and start answering questions, then all of a sudden you can get in there and be the lender that starts picking up some of these DSCR loans. Or maybe you pick up a non-owner occupied bank statement loan where you do a takeout. So lots of conversation points. I just want to get your mind going on where you can start pinging referral partners for getting their reticular activators open up and saying, hey, I just ran across this, and you want to be the point person to answer their questions. What other questions would you have?
For the calculation, is it just the P&I or is it the full mortgage payment?
It's the PITI.
Okay. This is where I get stuck. Like, is that doable? Obviously it is, but like a $450,000 loan with, taxes and insurance, everything's like $4,000. And that's I'm assuming $600,000 purchase price with 25% down. I mean, can you really rent a property out for 4,000?
Yeah, we see it. I mean, we
Really?
did one a lake home. It was a $1.2 million house, $8,000 payment, rented it for 10,000 on a 2-year lease.
That's crazy.
2-year lease.
Okay.
It's true though, but that's the conversation you have with people, right? You say, hey man, how's this going when you're in those groups? And yeah, there are people out there paying it. But you will see most of the DSCRs are in I would say the 180 to the 400 bucket, loan amount bucket.
Mm.
You get a lot of investors buying your duplexes or your triplexes. And so sometimes you get higher loan amounts on those, but then you've got 3 or 4, lease agreements on the property. But Chris, DSCR is, I would say, the new Earl, the VA, just everybody sees it as a no qualifier. And so you need to put that in your tool belt.
I have on these non-QM, I usually I've gotten some, but I kind of start talking about, pricing and all that. And that's where I get the big objections, because typically it's, say a 30-year fixed is 7%. It's usually like 8.5 maybe. And maybe I'm missing something, but charging points because that's how it's set up. So it's like, I don't know. People are like, yeah, I really want to have that rate and payment and all those fees, but maybe you can shine some light on that.
That's a great question, Chris, and I can help you sell that. The borrowers, most of the time, if you get a self-employed borrower, they've been turned down a couple of times, possibly, or the referral partner, the financial planner, the CPA, the realtor, they don't know how to get them. Well, you don't have your tax returns. I don't know what to do with you. So they've been told there's some problems. So immediately they're already expecting a little bit of a bump in the rate. And they will, here's historically speaking. So you don't, and I'm not saying that you are or will, but don't come at this from fear-based. Come at this from, you're solving a problem, position. And, like, yeah, it might be a little bit more an interest rate, but I've got an option for you. You don't have to take it, but here's the option for you. But we see on our bank statement programs, you're easily in if you've got a good FICO and you've got, a 20% down payment, you're going to be in your low 7s. Mm-hmm. And depending on what your comp plans are, or what plan you have set up with the non-QM lender, you can get away with 2 points, 2.5 points is what we see on average, anywhere from 1 3/4 to 2.5 points in discount points. But when you've got somebody who already is expecting to come in with 20% down, you could go to the listing agent and say, hey, this guy's been turned down. Or you go to a seller and say, hey, your house isn't selling. Instead of lowering the price on this house, why don't you offer to pay, some more discount point? Why don't you offer to pay more seller concessions? And then they say, yeah, that's a great idea. We'll keep the price where it's at. I'll just throw in some seller concessions and use the seller concessions to pay for the points. But there's usually a way to work. If you've got the realtor in tow and you got a borrower who knows that they're a little more difficult, they're a little bit less resistant on the rate, and you can help to have the seller pay for the points, if that kind of makes sense there. But it's really not 8s. You're usually in the mid to low 7s on a self-employed bank statement program with decent FICOs.
I have a quick question.
I guess, Lynn, maybe correct me if I'm wrong here, but I would imagine the people who need to utilize this are going to come in with, like, if they don't have to do something like this, sure, it's not going to make sense. But when you find the right clientele, they're coming in going, hey, I know that I need something like this to even make it happen. Right. So that even if there is a slight difference in cost or rate, that's their option.
Honestly, Casey, Chris, well, everybody, we have seen less rate and point resistance on the non-QM product than you'll see on an FHA loan. more conventional. Just flat out come at this whole thing from a position of strength, humility, of course, a position of strength, and just say, hey, it's an option, man. It's okay. It's an option. And then show them the appreciation, what they're picking up over time on the appreciation. And then, hey, if we get a rate drop, I'm here for you on the takeout, all that good stuff. But yeah, not very much rate or point resistance with these borrowers, frankly.
And prepayment penalty is usually pretty, like, isn't like a 12-month or 24 sometimes?
Yeah, if you have a non-owner occupied property, that's where you sell it. Because
Okay.
you can get an incredibly low rate if you throw in you can start with a 1 and go up to a 3-year. And but yeah, if you throw a 3-year prepay on that non-owner occupied, and you're going to get a pretty good rate. But you don't have to worry about that on owner occupied. You can't do that on owner occupied, only on non-owner occupied.
That's nice. That's a nice feature. I didn't know you had that option.
Yeah.
Can you do these, like, can you do any of these with less than 20, or does it have to be 20%? Like, is there any like 5 or 10? I doubt it, but
you can pick up a pretty decent stated income at 85. You can pick up a stated income at 90, but you're gonna hit some rate resistance there. It's gonna be ugly. I mean, you're gonna be like in the mid 9s. You gotta have some high FICOs. And when you think about it, if you have that borrower that doesn't have the tax returns, you really want that borrower to have some down payment. But yeah, but if you stay at 85, you can pick up a pretty decent stated income rate with the decent FICO.
Is there any product? I'm sorry.
Oh, I was just going to say,
Are there
what do you
any-
mean by stated income? 'Cause I know, like, I talked to the Change wholesale rep yesterday. This is kind of before I got Dave's email about this yesterday for about a half hour, just learning those products. And it was really eye-opening. So, what they have is they have your bank statement loans. Is that what you mean by stated income, Lynn?
Bank statement income, bank statement loans.
Okay.
Well, did I call it stated income? That also dated me.
Yeah.
Anyway, it's 12-month bank statement program. Yeah.
Okay. And so they were saying, their top end is 10% down on something like that, right? And then you have, you can go all the way to that community program that Casey did, that's 25% down, where it's just everything's just blank. So,
That's changes
no income, no ratio, primary residence deal.
That program's awesome.
He said those are
Change has an incredible no ratio program. Use it.
Yeah, they said, those are mid 9s. The bank statement deals, low 8s, he said. So like 1% higher than a normal loan, roughly.
Change has, our rates are, my world, our rates are on par or a little bit better than Change. I think you can get into your, like I said, mid 7s on a bank statement program. So not 8.
Okay.
looking at it right now,
Maybe with
like
10%
7.
down or something. I'm not sure. But he said like the DSCR loans, like you mentioned there, is like 50% of what they're doing.
Mhm.
And he said with 20% down's the minimum. 25% down, you basically call the rep and give him the address. He runs it through that software you mentioned that calculates like an average short-term rental income, which is way higher than a long-term, 1-year lease. And then your number. That's always been my hesitancy with working on those, because I still market like the Mortgage Trauma Center, and over the years, like you get DSCR loans that come across, and they're like they can't qualify at the last minute. I'm like, well, like the rental income came in too low on the appraisal. That's like the only thing that this loan is even being judged on, right? So like there's no way to fix that loan. But that was always my hesitancy, which is like, do I even want to sell these? First, we were getting 50 basis points, so that was like part of it. But other than that, like it doesn't go with our business model of on time, under budget, no surprises. If we're like, yeah, you're pre-approved. Oh, and then a week before closing, yeah, there's no way to fix it. Sorry. So the fact that he can give you a number to use on a specific property, then all you have to do is tell them exactly how much money they need to put down to make it work. And he said 25% down, good credit, low sevens for a rental property, which is better than Fannie Freddie, he said, is what they're pricing right now. So I'm like, you don't want to do that for a rental property. Like why get in tax returns and all that, you know?
You need to be in that world when you want to increase your leads and your referral partner hits. And these are conversations. You just go into realtors and tell that story. Just start talking like you just started talking today, and go tell your story, and just set up appointments, and just, that's what I'm going to talk about. That's what I'm going to talk about. Just a talking point. Hey, did you know? Did you know? And before I run out of time, I want to talk about seconds. So we can stay on this topic, but don't let me forget to talk about seconds, or you want me to transition there real quick, like?
I just have one quick question. So you're with Luminate, right? Are we set up to do loans with Luminate, or you're just being like really nice and teaching us all this stuff and saying we can text you with questions?
Mike is my best friend and my business partner, and so I'm here with Mike, even though he's not here.
Yeah.
And I am more than well. I already feel part of the team, and so yes, there's two things. One, we are doing wholesale at Luminate, and you can get set up with us in the future if you want. But otherwise, I will answer. I can put my text in this, whatever the chat is, my phone number in the chat, and you can text me with questions if you want. I think where I could help you is just strategies of just keeping it top of mind with you. If you're dealing with Change and Deep Haven, they're great. I think, if you get set up with us in the future, I think we don't lose any loans to Change. We're parallel to them. We have the same rates, blah, blah, blah. The rep over there is great. So you can get set up with us, and we would just be another tool in your belt also. But even if you don't get set up with us, the answer is yes, I want to be a resource for you and help you, just because I have a passion for the product and I have a passion for helping loan officers. If you're doing 5 loans a month, you should be doing 10. If you're doing 10, you should be doing 20. Whenever you hit the 10 loan wall, what can I do to help knock down that wall so you can get to 20? That's more of what the conversation is. So yeah, don't look at me as a rep. You can, if it's that you just got a question, I'll help you with that. But no, I'm not here to get business from you. If that happens in the future, that's great, but only to help you. And I just want to help you guys get into the non-QM world.
No, I mean, I'd rather send it to you than someone I don't know.
Yeah.
But how do we get set up?
Well, then I'll reach out to you after the call and see about what we have to do to get set up TPO. But talk to me about, I have a specific question on any of these programs, either owner-occ or non-owner-occ. Is asset verification of the down payment funds always a requirement, or is there any of these programs where it's not required?
For our products, you always have to have you always have to have your down payment reserves verified. Now, Change has that no ratio program. I don't know if they have to have assets on that one, but
yeah.
Even the DSCR, you have to verify your assets, your down payment and reserves. But that's all you're doing on a DSCR is your assets and your credit score, as we've talked about.
Yeah, I was shaking my head only because I learned yesterday that on the DSCR, you can get down payment money for a gift for a rental property. You can get a gift for down payment money. I'm sorry. So like they needed, I think if it was, it's almost like a takeoff of the Fannie Mae deal where if it was 25% down, it could all be a gift, no borrower funds needed. If it was less than that, they needed 5% of their own funds.
All of your down payment funds on a DSCR loan can be a gift, but your reserves cannot be a gift. So you have to have the reserves in the bank and source and seeds and those. But you're right, just have to down payment. The DSCR loan is crazy. It's the old I don't know how old you guys are. It's the old Fast and Easy, Countrywide Fast and Easy. It
Yeah.
scares me. It scares me a little bit.
As you're talking about it, I'm getting a little nervous.
Yeah, but
here's-
20% down, I mean,
Not zero down, though.
yeah.
That's
Like,
the
that
difference.
was fast and easy.
The difference is, Dave, the down payment
Yeah.
but we just talked about gift funds. But anyway, the down payment on that is the big difference. Anyway.
I have,
Well, that's why I asked about the no asset thing, because there was all kinds of, you could do almost anything if you didn't have to verify where the down payment was coming from. That gives you all kinds of flexibility. Go ahead, Chris, what were you gonna ask?
oh, I was gonna say, if we're gonna look into this, because I'm looking on change and pricing. I mean, it's not bad, so I just don't know how to price it well or like present the options to the client. 'Cause I don't know what do we charge? How much does Zenith make? How much does the loan officer make? Like so Lynn, what's normal? Like 2? Like I don't like 2?
Mm-hmm.
Okay.
100%. I said 1 3/4 to 2.5, but 1.5, 1 3/4 is an outlier. But 2 is the minimum out there. And most of our guys are getting, I shouldn't say most of our guys, a fair number are getting 2.5.
So 2.5.
But you have to be consistent. So when you set up your comp plan with change or whatever, you can't charge one, obviously, to Spirit Lending. You can't charge 1, 2, another 1.5. So you got to set up your change, or whomever will, set up your what do you call it? The name, just the comp plan or whatever with the lender. So,
Right.
but you probably ought to put it at least, probably I'd put it at least 2 is where I would start, Chris.
And do you usually do borrower paid or lender paid? I mean, what do you see people prefer, like the higher rate with no fees, or vice versa?
No, almost, I would say 90% borrower paid. And here's the why on that. Again, they're going to be rate conscious. You could get close to par on lender paid, not all the way there, but your buy-up multiples on that, not very good. So you're going to be in the high 8s. People are not going to like that. So when you got a purchase transaction like Chris, 5 of your deals or 6 of your deals were purchase transaction, then you just go to the sellers and you either have the buyer pay the 2 points because they're expecting it, or you get help from the seller. But yeah, everybody's going to want that mid to low 7 rate rather than worrying about 2 points.
I guess you can write it off too, is my guess.
Yeah.
I assume you can do 1031 with this too.
Yeah.
Yep.
Yep. That's a smart tool to have in your belt too.
And I've
Yeah,
talked to Sam, our change guy. He's responsive and very helpful. So
Change is a great partner to have, for sure. Absolutely. I don't know if they do seconds. So I think you have a 1-hour meeting. So we got 1 minute and I'll shut up, I guess. But the second features, non-QM has seconds too. You can have a stated income, I said it again, a bank statement feature on a second. So if you want to do the old 80, 10, and to avoid a jumbo, you want to avoid a jumbo situation on the first, or you want to avoid MI, then we have seconds that you can do. Full doc, and you can have a bank statement second program up to 85 and 90. Pricing's kind of high up to 90. But just know out there that you can think about this, guys. How many times, you got me started, sorry. How many times did we put people in 2020 and 21 and 22 into a 2.5% interest rate or a 4% interest rate? And they're like, I'm not gonna cash out and refi on that. I don't want a 7% or 6% rate. Yesterday I ran across somebody that still had their 2.5% VA. Well, but we have historic appreciation and historic equity in homes right now. And we also, by the way, year over year, credit card debt increased 8%. The credit card debt in America right now is $1.3 trillion. So you have all these people that have low firsts. They don't want to cash out on their equity and pay off the first, but they've got all this equity. Again, another tool in the belt for talking points. You just call up your clients. You know what their debt was at the time. You can go into HomeBot and you can load all of your database into HomeBot and see what the current market value is on the property for that borrower. And then you call them up and you say, hey, how you doing? Just doing a check-in with you. I'm obviously not calling to refinance your first. You're at 3%. But, you know, we've got these second mortgages. Do you want to look at maybe doing a cash out to lower your debt? And then you do where does it cross on, if you're on an 80 LTV on a full doc second mortgage, you can be at 8.5% rate, 30-year fixed on a second. Well, they're paying 19% on their credit cards. So again, just another tool in the belt, another talking point. If you want to go start calling your database, just start talking about second mortgages. Anyway, Dave, I talked too much. You got
No,
me.
you didn't. No, you did great. You did great, Lynn. Thank you. This was a great call. I'll reach out to you after this and just let's look into setting us up TPO with Luminate. Just from you as a resource, I appreciate your time. We all appreciate your time a great deal. So thank you.
Yeah, thank you.
I did have one more question. You said that we're expected to increase, volume is projected to increase 400% in 2025 over 2024. What was the volume in 2024?
400 billion? Don't quote me on that.
Wow. Okay.
It's a big market right now, guys, girls.
400 billion. So 1.6.
But nobody knows about it. Just it's okay. This is the mortgage business is $1 trillion mortgage business. And so when people say, hey, I did, a mortgage company does $1.5 billion and they think they're an incredible company, you got like less than 1% of the mortgage market. So guys, always think big and play big. Nobody's big. If you see somebody's doing 50 loans, who cares? Nobody's big. You're just as big as everybody else. But you do need to, that's the purpose of the call today. Regardless of where you send it, the purpose of the call today is you do need to be ahead of this. But you still are ahead of the game. It's not too late. By a percentage, you would be in the 90 percentile, would be my guess, of people who are getting into this product and talking about it. So you're ahead of the game. Think big, play big. A lot of the big players don't even know about it. Okay, your UWM's, Rocket, whomever you want to say, guarantee, they're not into this right now. So now's your opportunity. Seize it. Just play big and think big and don't shy away from this. Get ahead of it. Ask a whole bunch of questions.
Right on. All right, Lynn, thanks very much. We appreciate it. I'll be thanking Mike again, and we'll probably have you on again in the future. This was a really good call. This was really helpful. So thank you.
You're welcome. I'll drop so you guys can get to your stuff.
Thanks, Lynn.
We're good. All right. Thanks, guys.
Hey, Dave.
Thank you.
Thanks, Lynn.
You're welcome.
Good stuff.
Have
Dave,
fun skiing.
so in terms of like, if we wanted to do a change wholesale tomorrow, just so that way we're like pricing it right. Right now, Chris, you're showing borrower paid comp basically in your pricing, and then we would just charge the client like 2 points and then we would split it, Dave?
Yeah, we need to
No,
fix it.
we have to pay you. The rule is we have to pay you the way you get paid on all loans.
Right. So we would just charge 2 points and you would get a point and I would get a point. And
Well, yeah, we have to talk about that though, because 2 points, it's going to impact how it just still has to fit our economic model. So at the very least, charge 2 points, right? But we're already set up with something at change. Chris, do you know what it is? Are we set up at 2 or 2.5?
I have no idea.
I'll check it.
it'd be good.
I'll talk to Sam, but like I said, I always like talk to people and they're like, yeah, that like 2 points. Like that's where I get stuck is like the rate or the points.
Yeah, I mean, I think
that's
like Lynn
so-
said, we just like highlight like seller, like try to get the seller to pay that, right?
I mean,
Like,
in
we're
this
gonna
market,
tell
what
them,
if it's busy? You know, what?
you know, and I think
It's
to
a
his
buyer's
point too,
market.
like I've got a client right now, he makes no money on paper, but he's making $2 million next month. Like we're gonna be able to do a loan for him, you know? So like those kind of clients are like, yeah, that's fine, whatever, you know?
Right.
Yeah, I think it's some people are that may be desperate. Like, I don't care, I just want to buy a house. So, but you need to learn a little bit more because there are prepayment penalties, there are EPOs. Like, you know, like it's not 6 months, like some are 12 months. So you have
And
to
then more
you should
too,
give-
right?
What's
Like
that?
DSCR, like they've got 1, 2, 3, 4, 5 year prepayment penalties, right? Like, and the rate's all based off of that, right?
Yeah, so you need to learn a little bit more so you can educate your clients and they don't
Yeah.
like pay it refinance early and then they're like, wait, I just get hit with a $30,000 fee or, you know, whatever the math is. So
I mean, that's the thing, show them those options in Mortgage Coach, right? Say, hey, here's your
Yeah.
12-month prepayment, here's your 24-month prepayment, this is the difference. And you have to know you get hit with an EPO if you pay it off early.
yeah, we just need to figure out I don't know how to
Yeah,
present
the prepayment penalties in the old days, when you presented that, you could just show them, just say, okay, if you pay it off in less than a year, here's your penalty. If you pay it off in less than 2 years, however you set it up, and then here's the different the different options associated with the different rate options associated with those length of prepayment periods.
Mm.
So it's
Yeah, and
almost like a,
the prepay protects you from the EPO, right? Because it's usually what, 6 months worth of interest. I mean, that's a ton of money on these size loans. So they're not going to do that. You just have
Yeah,
to
and
tell 'em.
speaking of loan size too, Dave, I know you talk about economic model. You got to figure a majority of these non-QM deals are going to be high loan amounts, right? So for somebody like me who's got a
I
10K
think you
cap,
can
or-
still cap them though. I think you can still cap the revenue, Ryan. I
right?
think
Which
when
the
you,
main thing about a $1 million loan, we're making 20K a rev, right? So,
yeah, I
and
think
then we're
you can
not
still
doing
cap.
anything at Zenith, so I don't know.
keep it all, right? Keep it all, man.
I think honestly, you should just give us like 75.
I think you should have all the money. I don't know why we charge you guys anything. Stupid.
Dude, I know you just wanted to help
If
us
I was
out.
a loan officer, that's what I would want.
I mean,
Well,
duh.
I do think we need
I
to
agree.
have a
Isn't
Zap set
rent
up.
free? Like I don't have to, rent doesn't cost anything, does it? And those
Yeah,
credit
we do need
reports.
to have a
those
Zap
are-
set up because do we charge a
Yes.
fixed loan fee? Like I don't even know how to set it up, and if I don't feel confident, I don't know how to explain to the borrower. Like,
Yeah, I agree.
have
what is
to-
the fee structure?
That's the hardest part,
Fixed loan
right?
fee, because they're underwriting it. So what do they charge us? Like,
Yeah, there's
I don't
fees.
know.
They charge
Yeah,
an
there's
underwriting
fees
fee.
associated with it. Well, you've had more conversations with the change rep than I have, Chris. That's what I was going to ask you. Like,
Yeah.
give me the guy's contact information. I never got him. I know this is not a good excuse, but I've never gotten involved in these discussions. When John was here, I was letting John set all of this stuff up. So, and we just don't do a lot of broker stuff. So this wasn't really high on my radar. But if this is what this market's going to be, we definitely need to go pursue it and figure out what we're going to do with this. I'll reach out to the change rep. Chris, if you email me that guy's contact information, I'm sure I have it somewhere, but if you just email it to me.
If we have
then-
so we've got a broker overview chart, and it talks about the fees that are associated on the chart. So they charge us $17.95 underwriting.
Yeah.
oh, you mean in the SharePoint, Ryan?
Yeah.
Oh,
Yeah.
okay, cool.
Yeah, on our OneDrive, yeah.
But I'm not,
I mean, I
I've
can
never
share
been
the
to these
CD
loans,
from
guys.
the one that I did 6 months ago.
Yeah, it'd be good.
Sure, dude. Yeah.
Did
I
you,
think BIP had it set up. Wasn't it 2.5 points we had to charge, and we got
2.5 and we got 50.
Which
Yeah,
is
which is why
insane
I'm-
because they didn't do anything because it's all brokered. Like they underwrite, they do everything. Like it made no sense to do. It was,
Yeah, it didn't make sense then, but now it makes all the sense in the world.
Yeah.
And it's fun stuff to learn.
but don't you, like I said, I like, just send me the guy's contact information, Chris.
yeah, you talked to Sam, right, G?
Yeah.
That's
Yeah,
also,
okay,
that's
I
also
just
on that
did.
broker overview sheet too.
Okay.
All those info's on there.
I forget. Those are awesome.
Yeah, he was very helpful. It was like 45 minutes late for my call because I was sweating because right at 15 minutes after that, I was talking to a realtor about bank statement loans because I've been texting some agents about it. I'm like, shit, I don't know anything about these. Call me back.
I mean, it's nice.
So
Like,
I
so
checked-
I'm going through one with Deep Haven right now, and the guy Bruce just gave Ashley like a portal, where you don't have to do anything besides just upload the 12-month bank statements and they'll give you an income number. So if some guy's like, because I get guy I'm talking to is like, he's like, I don't want to go through your process. Like, just give me a ballpark of what I qualify for. And then if I know it's like what I want to do, I'll do that. So I was like, all right, just give me your bank statements.
Yeah,
So
and
that's-
Sam said the same thing. He said lenders reach out to him all the time. One, to calculate the income, the short-term income, if it's a DSCR loan. So you have the number. And again, there's no guessing. You can do the math and tell them, you know, how much they need to put down to make it work. And two, sending him 12 months bank statements, and then his team calculates the income, and you know the income, and you're done.
Yeah. Yeah, they want, I mean, I think they want to close the deal too, so Sam's very helpful.
This
Yeah.
is dope. I feel like we're gonna
Right.
get a lot of deals from this, at least like 10%.
You can
for
do
sure.
one a month, it's
Yeah,
great.
that's what I'm saying.
I mean, they seem intimidating because they're just different, but they're really, when you break it down and you get to understanding it, they're pretty simple,
Yeah. I
right?
remember-
There's so many tools that they're helping you with to calculate these things out. Like,
Well, and these asset depletion ones too, they've got like a super low like month you can divide it off of, right? Like I've seen ones where it's like you can divide their assets by like 60, right?
What?
Yeah, dude.
I
Yeah,
mean,
you can use
for the record,
depending
Freddie
on
Mac is
your age.
240.
Right,
you-
that's what I'm saying. That's
Yeah.
a lot.
But just so you know,
depending-
Freddie Mac is 240 months and Fannie's 360. Just there's a nice
Yeah.
little trick there in case you have that.
Yeah, change is 60 months. And they said
Damn.
it's like 60 or 70% of retirement accounts, if depending on their age. But anything that's liquid or brokerage account, you get to use all of it.
I mean-
Divided by 60, that's your income.
Dude, if someone's got $2 million, that's $33,000 of income a month.
I'm gonna go buy a bunch of homes now.
I think I'm going to use the DSCR loan because like
Shit.
that's the same rate as a Fannie Freddie deal right now for a rental property. Low sevens.
Yeah, yeah, that's crazy.
All right, boys.
Later,
gals.
Dean. Good luck.
I will,
And
I'll
Jack.
let you know what I hear back when I talk to Sam.
good stuff.
Thanks, guys.
Yeah.
Later.